All right, hey everyone, this is DayTraderRockStar for 10,000 watch list, but I'm going to actually put out this one video first as a beginning video because I think it's very important to go over the market conditions going into next week. As you know, I'm trading every day on the radio, and typically I take a bullish stance on the market, buy on pullbacks. Now this is the first time in a long time, probably about a year, that I started feeling very uncomfortable in the market. Especially on Friday, watching, I'm a technical analyst, and, when I analyze, in each individual stock, we work on patterns, we work on history, we work on a lot of different things. And someone brought an interesting fact to the room on Fridays is that, before the flash crash, we actually had a very similar pattern. So I looked at it on the chart and I said, you know what? This is a very, very ominous pattern that's forming, and just because on Friday we actually were holding up on Thursday, we had a beautiful recovery, everything looked like it was going to go good, and then Friday we sold back down, and then we bounced at the end of the day, and things got real choppy going into Friday. Now I want to show you two charts here. This is actually this chart over here. This is of the current S&P going out, from Friday. You can see the drop down here. The push back up, the little spike down, a little consolidation, the spike up in the inside day on Friday, and that's where we left off. Stochastics are, neutral, but the important thing is we had like three distribution days, actually two big distribution days, three if you count this one back here, and distribution days are high volume selling days, usually in a big range too. And if we look back over here, this is going out to last May, when we had the flash crash, and we could go right back to what we are right now, and just go back out there one more time just to show you. Here we go, right here. What we're looking at. Here we go. We're very similar. We actually broke down through the 20-period moving average. We kind of bounced off of this, bounced back up, then we consolidated, actually pulled right back down, then we had an inside day consolidation. So we actually left off at an inside day back in May also. And then we actually had a breakdown of the inside day, broke right down to the 50-period moving average. Now, that's to be seen what happens out of this inside day that we left off on Friday. An inside day pattern is usually a consolidation, a consolidation bar inside on the S&P mini or the S&P contract here, the S&P cash. And you don't see that. It's a kind of a one of those candlestick formations that doesn't come around too often, but when it does come around, you usually pay attention to it, and it usually gives you a directional trade on the breakout of either side of the outside day portion of it. So if we broke above Thursday's highs, it would be a bullish scenario. If we broke below Thursday's lows, it would be a bearish scenario. In this case, we broke down below it. And then that was the beginning of everything. And then we had the flash crash and the bounce, and then the pullback, and then the continued trend down. So that was really the big correction time here when we just really broke off. So we're at that level. We're at that level here in the markets where we're starting to form this bear flag, and and a breakdown of Thursday's lows would be very, and close at that level. Remember, it's all about the closing price. The close at that level would probably get me out of the market in a pretty serious fashion. And I think just because of the formation and the news in Libya, and now that we have to also put on the table that there's calls for mass protests, a day of rage in Saudi Arabia on May 11th. So that's next Friday. So and it just came out. I just was just on my news source here, Trade the News, and it says here, Saudi Interior Minister bans all marches and demonstrations. Security forces will do what is necessary to keep order. European press citing state TV. There has been some small protests in Saudi Arabia over the last few weeks, but media attention has been focused on internet-based campaign to hold a day of rage across the country next Friday. So, that's going to be a major focus on the markets, and and that's that tells me something. We had Greece, we had the oil spill and we had all this unrest before we dropped out, and it's very similar, right? Can you picture, can you see that the 200 period moving average, underneath us here, we're underneath us here, we have kind of the same distance, we have the flag, if we do break down here, we could easily get a nice move down similar to this. Very similar patterns, not to say patterns repeat themselves, but a lot of caution. I feel it's even better this week is to lighten up, don't be so aggressive, stick to quality stocks, of course, and let's get past this week. Let's get past this week into next week. Going into options expirations is usually a very bullish week. I just want to see how this formation plays out. So, going into I'm going to put out the 10 for 1,000 watch list, which is set up with some good setups for this week. But I tend to want to err on the side of caution this week, and probably, cut back on any positions just to feel safer in the market. And let's get past this formation that's forming right now. All right, so this is Day Trader Rockstar for Day Trading Radio, and we'll see what happens Monday. I'll see you in the market, daytradingradio.com.